Hey everyone, this is Marcus and welcome to my monthly market update. Before we get started, don't forget to press the subscribe button and the notification bell, and you'll be notified every time that we upload a new video. All right, so let's get into this. So right now, the month of June, the 1st of June, as I record this, is basically a grand reopening, if you will. After an extended lockdown and now nationwide protest, the economy is beginning to slowly reopen its doors. This reopening, it has the opportunity to provide some much needed economic optimism to really what has become a stressed country for the most part. Unfortunately, the ill effects of the coronavirus and the protest are likely to linger for a period of time. So let's discuss. All right, so if we're looking at the economic numbers for May, it's gonna tell a pretty bad story of what an instant recession looks like. So the unemployment rate for April jumped to about 15% after being reported at about 4.5% and 3.5% in the previous 2 months. But just to give you a comparison here, during the financial crisis of 2008 and 2009, the unemployment rate, it peaked at about 10%. And so we're already at 15. And so the Bureau of Labor Statistics, they also reported that we have about 20.5 million people in jobs that were lost back in April. And we'll figure out what May is going to bring. But the financial markets, it actually took those numbers in stride, as a lot of the investors, Wall Street, they were expecting job losses to be about 22 million and an unemployment rate of about 16 million. So we were under those numbers. Let's talk about the housing market. The housing market has been hit hard. Existing home sales were down about 18% last month, while housing starts that was down about 30%. A lot of bad news. If you're looking for a bright spot, inflation, I guess, which has averaged about 3%. It's currently running at about 1.5%. But you need to remember this. These economic numbers that I'm giving you, that's just a view in the past. The stock market tries to stay forward looking. So let's discuss the stock market. So despite all that negative economic news, the financial markets performed quite well in May. The S&P 500, the Dow Jones, the NASDAQ, they all posted pretty impressive gains for the month. Some companies were seeing record sales in the face of all this turmoil, so to speak. So you have companies like Amazon, Walmart, Costco, Home Depot, Microsoft, Netflix, Johnson & Johnson. They all are trading at or near their all-time highs. On the flip side, other well-known companies have basically gone the other way. You got Hertz, JCPenney, J. Crew, Neiman Marcus, PR1 Imports, Gold's Gym. They all declared bankruptcy. So the stock market, they did see this economic disaster coming when the S&P 500 lost 34% of its value from February basically to March 23rd. And the numbers that were released in April and May, they basically confirmed what the market already knew. Now, just like I said before, the market is forward looking, and it's looking forward to the grand reopening of the economy today and hopefully better times ahead. So what does that all mean? It means that now is a good time to reassess your risk tolerance and perform what I would call a post-trauma debriefing on your financial plan and your emotional reaction to the past 3 months. Now, be honest with yourself and review how your portfolio performed in both the sell-off and the rebound, and hopefully you were part of the rebound. But how did you handle the emotional aspects of those wild swings? Some investors will look at that and they'll conclude that their portfolio carried too much risk and they weren't financially or even emotionally prepared for when the market had that immediate decline of 35%. So now that the market has bounced back, it may provide a window of opportunity to properly align your portfolio to your true risk tolerance. But the bottom line is to be prudent and, more importantly, emotionally stable during those times. And you need to own a well-diversified portfolio at risk levels that allows you to stay invested for the long haul. So the moral of the story is that you need to have a plan. All right, that's all I have. Thank you for watching, and I'll see you next time.